Happy Sunday, Tampa Bay. We're with you for another week here on the Duncan Duo Real Estate Show, like we are every Sunday at 10 on WFLA News. I have our preferred lender, Melissa Rodriguez with Citywide Home Mortgage with us this week, Andrew Duncan with the Duncan Duo team at LPT Realty. I'm sorry if I'm a little raspy, if I sound a little different than normal. Been a little bit under the weather, but trying to push through some post-vacation congestion, sickness, sinus stuff going on. And we want to talk about the government shutdown today. But if you don't follow us on social media, hit us at the Duncan Duo, Twitter, Instagram, YouTube, TikTok, Facebook. Follow us. We're always doing cool stuff. We're actually going to be giving away some Lightning tickets. Excited for another year of partnership with the Lightning. Opening night is the 9th, I believe. And, we're always doing some cool stuff with the Lightning. So if you're a Lightning fan, we'll also announce the date of our appreciation event, which we are working on tying down right now during the holidays. We're hoping to do it during the holidays, and we're working on that now, so we should have a date for that soon. So Lightning fans, make sure to follow us again at the Duncan Duo. So the government shutdown is confusing for a lot of people because it doesn't completely shut down, right? Like there's still some people working. There's some parts of the government that are funded, but real estate gets hit by government shutdown, and so. There are consumers out there that may be under contract or may be looking to buy. And depending on how long this one lasts, some people are speculating days. Some people are speculating weeks. Some people are speculating a month. There's a lot of variability out there. But let's talk. I want you to talk really quick about what happens or what the risk of happening is, because it is a bit of a gray area. We've had shutdowns before where they're like, oh, we're not going to be able to do a VA loan, and all of a sudden, okay, we're actually good. We can do it. So there is some confusion on that, but that's probably the biggest obstacle is all the confusion that happens.
So we have to go day by day. So the last shutdown was 2019, and it lasted about 30 days or so. But how does it affect us? So anything backed by government, USDA, FHA, VA, and also FEMA. We don't really think about that.
Yeah.
Right. Flood insurance. So even if you don't have those government-backed loans, but you're in a flood zone, we may not be able to find insurance. Yeah. Right. So we're going to have to wait. So how does it affect us? There's tons of people being furloughed. So the government agencies are very short-staffed. So for USDA, we may not be able to do any. There isn't any government funding. VA and FHA, they're just delays in closing.
Yeah. And so there are portions of the contract that allow for that. Again, every contract's different. We're not giving you legal advice, but there are ways that contract language can protect someone to risk losing the house they want if there is a delay. But some of that also depends on how long that delay could stretch, because there's other contingencies in the contract that then start to get twisted. So definitely something to be paying attention to. And you mentioned the potential for flood insurance, because that's something that people forget about. They think about the loans, but there are people out there that have to have flood insurance. They're in a flood zone that are going to be buying a home, and the flood insurance isn't going to be able to be bound, which means the lender isn't going to issue the loan, which means it's not going to be able to close.
We're not going to close, right?
Yeah. So those are things that happen. I think other parts of the government shutdown that are that get misunderstood by people is, the government is one of, if not the largest employer, especially when you factor in defense contractors and military. And there are a lot of people that go under contract with a buyer, and they may not actually know.
Yeah.
They may not know that their buyer is employed by the government. They could be furloughed. They could be not getting paid right now.
Right.
They could have a hard time confirming their employment. And so it does throw some curveballs to the real estate market with those loan products.
Well, even for let's say the IRS, because a lot of these loans, and all of the loans, it doesn't have to be a government. So conventional loans they really won't be impacted unless you're in a flood zone. But we ask for tax transcripts.
Right. And you may not be able to get them if they're not open.
Right.
Yeah. And then if you can't get the tax transcript, then the loan can't be underwritten. So there is a domino effect where essentially it could impact almost any real estate transaction. And so the other part about it that consumers aren't aware of, and look, I love VA loans. I preach all day long. I just sold a personal investment property through my fund to a buyer that had a VA loan. I took his offer over someone else's because it was a VA loan. My dad was
just feels good to help.
Yeah, them. And my dad was a disabled veteran. My brother's a disabled veteran. Like, I am very pro military and pro, what they've done to sacrifice to protect our freedoms. So there's a lot of confusion about the VA loan from a standpoint of that. Sometimes people kind of classify it or think that it's an inferior loan. And unfortunately, when you do have the government shutdowns like this, it kind of does become a little bit inferior. But there are a lot of buyers and agents out there that will go under contract and not really pay attention to the type of loan that the buyer's using. So if your home is under contract right now,
right,
you might want to look at that. If your home is set to close in the next few weeks, you might want to get some clarity about whether or not it's going to be able to close and fund, whether or not it can bind insurance, whether or not the VA is going to be able to do what they need to do to fund the loan. And then additionally, is your buyer employed
by a federal agency?
By a federal agency, right? So we have that a lot in Tampa. I mean, our office is a block away from the entrance to MacDill Air Force Base. So we work with a lot of service members. Most of the military really doesn't get hit. They stay. That's part of that. That's funded. That's like defense. But there are some defense contractors, federal workers. There are some people at MacDill that will get furloughed and some potentially even have employment terminated. Yeah. There is discussion, and that's part of the political wrangling right now between the Republicans and the Democrats. Is Trump is saying basically like, if you keep us shut down too long, you're going to give me my greatest victory because I want to literally dramatically reduce the federal workforce. So it's kind of this funny political game that's going on. It sucks for consumers who are stuck in the middle of it. But the reality is that those types of decisions can definitely trickle down to the real estate market. Because then if this shutdown gets delayed longer, and Trump does lay off or terminate a lot of employees, then those are people that might be under contract on houses right now and then lose their ability to do anything.
Correct. So there is a silver lining, though. Yeah. We may, just depending on how many days it's shut down, but it could cause interest rates to fall.
Right. You sent that in an email to our team this week in that because whenever there is that uncertainty out there, the way the markets respond is some interest rate relief. So hopefully it's not as long of a shutdown, but we still get the interest rate relief. Yeah. But there is a benefit that you could see some interest rate relief. Again, of course, if it goes on too long and a lot of people get laid off, it's going to impact them. But for the people that it doesn't impact, it may make borrowing a little cheaper in the short term.
Correct. We may see more refis, more movement in the market. Hopefully, it's keeping us all on our toes for sure.
And I think speaking of refis, if you are someone that has a VA or FHA loan right now, there's a product that I want you to talk about. And again, citywidetampa.com. You can go to that website and contact Melissa directly. You can fill out a loan application. Again, it's citywidetampa.com. And so there's a streamlined product that allows someone that has a VA or an FHA mortgage to very quickly and more easily than a normal refinance, simply to reduce their interest rate versus the complications that may come along with another loan product.
Correct. So they're called FHA Streamline or VA IRRRL, which is just simply to reduce the interest rate. So a lot of times in these, we can close within a week and a half, just because we don't order appraisals, we don't really do an income verification because all of that's already in the system.
They already have all that. So all it's basically doing is saying it's repricing the rate to today's number. So if you're out there, so there are a lot of people out there that are not in equity positions that don't realize they can do this, right? Like that. When I say not in an equity position, it could be they're in an equity position, but the fees of selling might have to come out of pocket, right? So because there's no appraisal, it can instantly, very quickly, just simply reduce their payment.
Correct.
The other thing it does too is, and again, depending on the timing of it, it also can skip a payment, I believe. Is that accurate?
So it always... it's not really free. Yeah, they collect it at closing.
It's just pushing. Yeah. Okay, I got
Correct.
you. Right.
So if we close
they're lumping
September,
it into the mortgage, so you're not coming out of pocket. It's part of the mortgage at that point.
Correct.
So again, there are people out there in short-term struggles, short-term hassles. That again, I'm certainly not recommending people to go into more debt. But if it can reduce your payment and you're going to be there long enough to do the math, it can make sense. And so there are people out there that have, and we looked this up in our own database. For a streamline, I mean, what would you think would make sense today? Something into the sevens, like if someone has a VA or FHA mortgage and they're decently into the sevens, it may very well make sense to do a streamline.
Correct. I would say anything that we could reduce it about 1.5 points.
Yep.
It will make an impact on their mortgage.
So like if they're at 7.5 and you can get them to 6, that makes sense. Right. And so again, there are people out there, that are in that position, or they're in the position where they're stuck and they'd love to reduce their payment some, but they don't know that the streamline's available. They're like, oh, I can't do a refinance because the homes in my neighborhood have gone down. But with VA and FHA streamline, they don't really requalify you as the same way. They don't reappraise you. It's simply a process. It's a much quicker, easier. So again, if you have a VA or FHA mortgage and your loan is in the sevens now, and again, maybe you're low sevens, right? And maybe it's not right for you now, but then Melissa prices it out and says, okay, I'm going to keep an eye on rates. We're going to tag you. And then when they maybe come down another quarter or a half point, a month or two down the line, maybe then it makes sense. If you are one of those people that has a VA or FHA loan, please go to citywidetampa.com. The streamline refinance has saved a lot of people. It's saving them money. It's helping them get through. And there are a massive amount of people that bought between 23, 24, 25 that have those high rates. And certainly they're waiting for rates to come down. And maybe some of them it makes sense to wait longer. Again, depending on their situation, because rates may come down more. We don't know. We suspect we're going to see a couple more Fed cuts this year, but there's no way to know based on Powell's speeches what's going to happen next year. We may see no further interest rate relief in the next year. So if you're someone that does think that they could say that it makes sense and it could save money, again, hit up Melissa, citywidetampa.com. Again, that's citywidetampa.com. And speaking of interest rate programs, after the break, I want to talk about the 1.0 buy down that we're doing on our listings. Yep. So this is compelling for people that sell their home with us, as well as people that look at our listings, as well as agents that are thinking about bringing buyers to our listings. We know that the builders are notoriously doing buy downs to drive traffic to their communities. And we've come up with something that doesn't quite match the aggressiveness of the builder, but there are plenty of people that don't want to live in builder tract communities or HOA communities that want to live in other places. So we're going to talk about our 1.0 buy down after a quick break here on the Duncan Duo Show. So we're back here on the Duncan Duo Show talking about the Tampa Bay real estate market. Andrew Duncan with the Duncan Duo team, LPT Realty, joined by our preferred lender, Melissa Rodriguez with Citywide Home Mortgage, citywidetampa.com. Again, that's citywidetampa.com for all of your financing and refinancing needs. The thing we were talking about before the break, we talked about the government shutdown. We talked about what happens with that. We also talked about the VA and FHA streamline and how people can simply very easily and quickly lower their interest rate if they're into the sevens with FHA and VA. But one of the things that we decided to do on our team, because we know the market's challenging for both buyers and sellers, is we're offering a free 1.0 buy down on homes priced between $200,000 and $800,000 that our team has on the market. And what that basically means, Melissa, and correct me if I'm wrong, but it's basically you get 1 year where the interest rate is 1 point lower than what it would be if you qualified without the buy down.
That's correct. So let's just say today the rate is 6.5. So it would reduce it to 5.5 for the entire year.
Yes. And so we're doing that. And again, it's costing us money, but we're doing it because we want to get more attention on our listings. We know that the market's very competitive. We know it's harder to sell today. We know the buyers are strapped and it's harder to get them to buy. And the purpose really is to say that I think a year down the line, it's probably about where interest rates will probably be. Right. So the idea is that, you give them a 1.0 buy down and then at some point down the line they refinance, but they can at least afford it for the first year. We give them a credit to buy the rate down. And so it's an advertising feature. So if you're thinking about selling your home and your realtor that you've spoken to isn't doing that, we're doing it. If your home isn't on the market and you want that extra exposure, we're giving that exposure for free. It's an extra thing that we're offering to get our listings more attention and more effort from buyers. If you're an agent and you're looking at our listings and it's between those price ranges, single family home only, 200 to 800, we're offering it with our preferred lender, not with you. Again, you can ask your lender to do it, but we're offering it up front with our preferred. And again, I think from our perspective, the idea is to make our listings more attractive and certainly give us a chance to be competitive with your mortgage company on the mortgage side of things.
Right, correct. And certainly you can, like you said, you can ask your lender, but it's going to cost you thousands of dollars. It's not just a couple hundred. It is.
No, it's very expensive.
Yeah, it's very expensive. And you're going to save at least about $200 a month. So it's minimum.
Yeah.
So it's
depending
on
the price point. I mean, obviously you're talking about an $800,000 house. It's going to be a bigger number, but it is a substantial savings. And sellers, this is something that, it's funny. We had you guys calling some of our clients this week to introduce the program. And some of them are like, what are you talking about? Is this some sort of scam? Why are you giving me this? And it's like, you don't understand. We're not, it's a mutually beneficial thing. We're doing it to get more exposure for our homes so that we can sell listings and we can get more buyers interested in your home. We're not asking the seller to pay anything. We're taking the hit financially because we're capable of doing that because of the time we've been in the marketplace and how successful our company's been. We're taking that financial hit. So it doesn't cost the seller anything to do this, right? It's free.
It does sound too good to be true, but it's great that you're offering it, and I'm happy to be able to offer it on our listings.
And so if you are a seller and you want that extra exposure, there's a lot of real estate agents that can't offer that. They don't have the scope or the scale or the size to be able to say, "Hey, Mr. Lender, will you do a free 1.0 buy down for me?" They're going to be like, no. Why would I lose thousands of dollars for you? Right. For us, we can do it because of size and volume. So it's an extra exposure piece for our sellers. And again, at the same time, it's also a benefit for the buyers and the agent on the other side. We will get pushback from agents because they'll be like, "Oh, well, you're making us use your lender." No, we're not. Actually, you can use whoever you want. We're just offering you a financial incentive if you use ours. No different than Lennar, DR Horton, West Bay Homes, Casa Fresca. Shout out Casa Fresca Homes. My girlfriend works there in case you all don't know. So the reality is we're just offering a financial incentive if you use ours. And for us, we find the benefit in that we can have a smoother transaction. We have a one-stop shop. We have the title company. We have everything in-house. And we feel like that allows us to overcome obstacles. One of the biggest obstacles in the real estate market right now are cancellations. And, from the idea that these different affiliated companies are having to work together, and we're running into struggles where the lender wants to justify their value and the realtor wants to justify their value. And then the title company swoops in and says, "But wait a second, we want to assert our strength now, and you can't do that," So the idea of having everything in one-stop shop does provide for that smoothness and improves cancellation rates. It keeps everyone on the same page to keep deals together at a time when deals aren't, when deals are more likely to fall through.
No, it's been fantastic. It's been fantastic to work so closely with the agents at the Duncan Duo. Also, the title company that we have there. And so you just walk into each other's office, or even the other agents call me. We're so responsive. Our team is fantastic. Our processor. So it's a great process.
Awesome. And what I want to talk, so when we get back from the break, I want to talk about why lenders, two things. One, why lenders get taxes and insurance wrong, because this is a sticking point. So often buyers pick the wrong lender based on the lender's fantasy land quote of tax insurance. And then secondly, why you should think about pre-qualifying while your house is on the market. Like, don't wait until you find the buyer, you get your homeowner. We've had horror stories where sellers have said, "Okay, we're going to sell our house. Once we get it into contract, then we'll go qualified." And then they find out they can't qualify. Now they're about to be homeless. What are they going to do?
Gosh.
So I want to make sure people don't avoid that mistake. And we'll talk about that and more after a quick break here on the Duncan Duo Show. So back here on the Duncan Duo Show, talking about the Tampa Bay real estate market. Andrew Duncan with the Duncan Duo team at LPT Realty, official real estate agents of the Tampa Bay Lightning, So excited to be back for another season. You will see me at a lot of games this year, and our team will have our announcement for our appreciation date that we do at the hockey arena every year. We'll have that announcement coming soon. And if you don't follow us on social media, make sure to. We're always giving away lightning tickets and signed merch from the players at the Duncan Duo. So we talked last segment about our 1-0 buy down that we're doing for our listings, to get our listings more exposure and to help our listings sell, kind of following along the footsteps of a lot of larger scale home builders. That's what they do to drive activity. But what I want to talk about next is how often mortgage lenders misquote taxes and insurance.
I don't understand why, to be honest with you.
I think they do it because they're trying to cheat. And here's what I mean. When you get people buy the payment. Okay, so when they call up an online lender, okay, instead of that person being honest because they care about the like you, for example, with our company and a lot of other real estate agents that you work with, you value the long-term relationship of the client, so you want to be transparent and honest and tell the client all the truths so that nothing backfires. Some of the lenders at online, national, kind of faceless companies, they're going to throw out these low numbers to make the payment look better to try and win the loan and then hope to keep it together when they come to find out that they misquoted all these things. So so that, I believe, is what happens. I think that there are a lot of unscrupulous lenders that will give a good faith estimate to a buyer that the buyer looks at and says, Melissa, I got this quote from this company and my payment is $600 lower with them, right? When it's not really, right?
No.
So you have to talk about that real quick. What does the consumer need to compare to make sure that they're not getting screwed?
Well, and I will review, if you are already pre-approved or you have a loan estimate, let's compare them together. Let's sit down side by side, or let's do a Teams call and I will share side by side, because what you need to look at are taxes, like you're saying. I go into the property tax bill or property tax collector, pull the tax bill, and we can use the current tax bill in place. Obviously, if they have additional exemptions, if they're a widow or if they're blind or if they're a veteran that are fully, you're not going to qualify for that if you're not in the same position.
Or you may qualify for better if you have those things and the person owning the home doesn't.
Right. So those are the things that you have to look at. So if we do see that, then we have to use a property tax estimate, which you can also go online at the county's property tax or property appraiser's website, and they have literally a button that says tax estimate, and you can calculate it yourself. A lot of the times it's a little bit higher than what it's really going to be because you're going to claim homestead.
But you'd much rather it be higher than come back and find out that it's way more.
Right. You're going to have a payment shock next year when your payment goes up, $300 a month.
And so what I also think happens, so on taxes, so for example, how our property taxes are formulated in Florida, every state is different. If you're talking to a lender that doesn't specialize in a local market, they're not going to get this right because they're not going to do the homework. They're in Connecticut or they're in New York or they're in California, and they're going to be like, oh, well, taxes here are about like this, so let me throw that in there, right? They're going to get it wrong. The second place that they get this this process really wrong at is on insurance. So they'll assume, or they'll simply put in just basic numbers that are aggressively low, that aren't realistic. Right. And then the person looks at it and says, oh, my payment's only $2,200. Yeah, I'll go with this guy. When in fact, his principal and interest was higher than yours, but you were honest about taxes and insurance.
Correct.
And then when the loan finally gets to closing, there's going to be a little curveball here and there. Oh, guess what, Mr. Buyer? We were wrong on the taxes. Your payment's going to be this much. Or we were wrong on now that you've got your insurance quotes up, it's $1,000 more a year.
And now it's too late.
And now you're too far down the process. You've committed to that lender, and you missed out on a lender that had a lower P&I payment, and principal and interest is what I mean by that. So the only thing that you should really compare when you're talking to mortgage lenders, because the taxes, they're going to be set. Okay. No matter what lender you use, okay, there's going to you're going to, sometimes people don't factor them in if they put enough down, but it's likely your taxes are going to be estimated and the portion of the tax bill is going to come out of your monthly payment. And whether you overpay or underpay in an annual year, it gets corrected. Like there's no free ride. No lender is giving you a better deal on taxes. Okay, you're paying what the county says is due. And if the lender over or underestimates it, they're coming back to correct it and fix it. Either they're increasing your payment or they're dropping your payment. More than likely, they're increasing your payment because taxes go up. The insurance is the other element, though, where people will get this lender, and then that lender says, hey, here's what your insurance is going to be, and they take what the lender says on insurance as fact. Yeah. The only thing that you should compare between the lenders is fees and costs, principal and interest.
Correct.
Completely don't look at the payment at the end because it's irrelevant. They don't control that. The only portion of the payment the lender controls is the principal and interest portion. Yeah. That's it.
And I request insurance quotes for them.
Yeah. Yep.
Even before they go under contract, just so they know.
Yep.
Right. It's fully transparent. I am very involved with my clients. I'm with them from start to finish at the closing table. If I can make closing, I will. But I just, like you said, with those big commercial, they don't see your face. They are not going to see you ever again
so
or work with you.
If they dishonestly keep a loan together so they can make their money, and then they do a bait and switch and say later on taxes or insurance are higher, it really doesn't matter. So that is one of the ways that a lot of mortgage lenders dupe people, and people get they get misled. So speaking on the misled part, one of the things that happens with a lot of customers, and we just had this happen recently, so I'm really kind of, this is a PSA putting this out there. If your home is on the market, you should already be qualified for your next step.
Yes.
You should not wait. If you're even thinking about putting your home on the market, okay, qualify now for what you plan to buy after you sell it, because there are people doing this backwards. Okay. They're saying, okay, well, once we get our house under contract, then we'll work on getting qualified. That's a legally binding document that you can't cancel. Okay. You're selling your home to that buyer at those terms. And if you find out you can't qualify or you can't buy what you want to buy, you're now stuck. We had somebody moving into a hotel because they didn't follow the advice. They're like, oh, well, we're going to have to figure out something because we need the money to sell the house, and then we'll fix our credit, because there's a lot of credit mistakes. There are people that get their identity stolen. There are people that have old collections that show up. There's stuff attached to people, even if it's the wrong name. They should get qualified and have all of that stuff done before and if your house is on the market and you haven't done it yet, do it now. CitywideTampa.com. Go hit us up. We'll help you. If your home is coming on the market, do it now. Do not. There's people out there so often that arrogantly or egotistically think that I got this or I got that, or man, in 2017 they told me I could buy all. This is a completely different animal today. The qualification process is entirely different. Don't let your ego get in the way. Get qualified way before you think you need to. Make sure there's nothing wrong, because it will cost you a lot. The laziness and the apathy of waiting will cost you a lot of money.
Well, and the clock starts ticking the minute you sign your listing agreement. Well, the minute it goes under contract for the sale of your property. So, and then what? Like you said, where are you going to go? And then some people are like, oh, it's fine. I'll stay in a hotel. A hotel or Airbnbs, they get expensive.
Yeah.
And then but then when are you going to start then thinking about buying your own home? You have to just have that confidence and that peace of mind. Right.
Yeah. I think the other thing is that the process is much different today and complicated. So if you've gone through and gotten a mortgage before, or you think, oh, I have assets, or I have great credit, or I have great income, you may not realize the intricacies of the process today. You may realize you don't even need to sell your home to qualify to buy. You might find out, you know what, I can actually go and buy, without selling my home. And I'm not advising that, but for some people it does make sense. We've had people say, you know what, I don't really want to live in my home while it's on the market because of the nuisance or inconvenience, and I'll price it aggressively. I'm confident it'll sell. So however, in some instances, you may have to sell the home. You may not be able to qualify without the money in the home.
Right.
So you need to know that ahead of time so you can make the right decision, so that you don't make one contract contingent on another and then find out, oh, guess what? Now we've tied up these properties. We've got escrow at risk. We've got our risk of becoming homeless, and all because we arrogantly thought it would be easy to get a mortgage.
Well, I had one recently where the gentleman made fantastic money, had great credit, but was going through a divorce and was going to have child support and alimony, and that killed his debt to income ratio.
Yep.
And there's things like that you don't really think about or anticipate.
Yeah, and even like, we've talked about this before too. There are loans that can accommodate some of those situations depending on your wealth. Right. You've done loans for high net worth people where they don't really have to jump. You can bank statement loans, right? They are available. Now, not common, but they are available for someone who has a lot of money in the market or has a good income history or has assets. So there are ways that you can kind of do that, but it's the threshold or the amount of money that you think you need to have is probably higher than what you think.
Correct.
So I think that's where that conversation needs to happen ahead of time. And that's one of the reasons we're being proactive with this 1.0 buy down with our home seller clients. Like, we're offering the 1.0 buy down obviously to help our sellers get their homes sold and get them marketed and to help make it more attractive when a buyer is looking at our listing and other properties. But the other reason we're doing it is because it is an opportunity and a reminder to the seller when we're reaching out and saying, hey, look, we're offering this to you. By the way, don't make the mistake of waiting until it's too late to look at your process of buying. People, again, all the time make it. And we've had it come back and really bite some customers and cost them a lot of money.
Well, even if they don't want to buy right now, but let's say 45 days, 60 days from now, your credit's good for 120 days. But let's just get it out of the way right now. Let's be confident in what you can purchase and work on it now before it's too late.
And again, because you may have a credit issue, you may have a collection, you may have a medical bill. We had one not long ago where something attached to someone's credit, and it wasn't theirs, but they had a name a very common name in it and some sort of collection in a county they'd never lived in. And they went through, disputed it, got it taken care of. But those are things like that people, if you're not regularly looking at your credit, and it's not just Credit Karma or the place you can get the free credit, because there's different credit bureaus. So it's depending on which lender, which credit bureau, which some reports this, some report that.
Which model they're using.
It's not, if you look at Experian, for example, that may not be what Equifax shows.
Correct.
You've got to have, that's why starting that process ahead of time. We'll be back. We're going to wrap up with our last segment after a quick break here on the Duncan Duo Real Estate Show. It's decent, funny content. So back here on the Duncan Duo Show, talking about the Tampa Bay real estate market. Andrew Duncan with the Duncan Duo team, LPT Realty. It's funny, if you don't know this about me, I grew up in a small town in Indiana. I went to IUPUI in Indianapolis, Indiana. And grew up there. I left pretty much the second I graduated college in 2000. I was gone. I've been back maybe a dozen times for trips, vacations, weddings, funerals. But there was this there was an article that came out, the best small cities to live in America, but don't expect bargain prices. And 3 of the top 10 cities were in Indiana, which I thought was really interesting because I got out of there.
What would you do for fun? Is there anything?
So there's, and again, there are things, there are things to do for fun. Obviously I'm a basketball guy. So every kid in Indiana grew up with a basketball hoop. Everyone plays like it's very common. You go to Friday night football games. You work on a farm. There's cornfields everywhere.
Chucking contests.
There's a lot of wide open roads. There's a lot of hunting. There's a lot of fishing. There are cool things about Indiana. It isn't super diverse, where I grew up. But I found it interesting. The top 3 cities and Indiana takes 3 spots. The first one's Carmel, Indiana. Been to Carmel many times. It's just outside of Indianapolis. It's like I've got family relatives that live there. They've got good sports teams. It's close to things in Indiana. Indiana also has a thriving car scene. The Indianapolis 500. Yeah. So there are great things about Indiana. The reason why I said I'm getting out of here, and look, I still root for the sports teams, winter. No, thank you. Yeah. Scraping ice off of windshields. Like, I don't care how great this small city is. If I got to go out there with an ice scraper in the morning.
It is beautiful.
It can be. Yeah. But the ice scraper thing. And then they also had Westfield, Indiana, which is, and Fishers, Indiana, which are all very much smaller suburbs outside Indianapolis. So they call them small cities, but in reality, it would be like saying Riverview is a small city.
Oh, gotcha.
Riverview is a small city. Don't get me wrong, but it's Tampa. Like, come on, let's be real. Yeah. How many people are from Riverview, and when someone asks you where you're from, they say I'm from Riverview?
No.
They say they're from Tampa.
Right.
And it's the same thing like Brandon, Valrico, Temple Terrace, Lutz. Like,
I grew up in Temple Terrace. I kind of said Temple Terrace.
Did you really? Okay. Well, I think most people are probably saying Tampa, like, especially if someone not local, like, oh, where are you from? You would say Temple Terrace to maybe local people,
right?
Because they'll know what Temple Terrace is. But if somebody from, Wisconsin says, oh, where are you from? You're not going to want to explain Temple Terrace, and you're just going to say, I'm from Tampa, and I think that's the same thing. Those are cities that basically, considering and saying they're small towns, to me, a small town is like hours away from everything, like out in the middle of nowhere. It's got its own little town square, like
the Dollar General, one light.
Yeah, one light, a Walmart, a McDonald's, that's a small town, right? So when you're like, 20 or 30 minutes outside like a several million population city, to me, I don't know if it's really a small city. But yeah, similar to here, I think what that's probably saying is Indianapolis is probably thriving and doing pretty well. And for a lot of reasons. They've had winning sports teams. I've talked about Tampa's economy and how much it's been positively impacted by winning sports teams. We won a Super Bowl. We won multiple Stanley Cups. And the Rays, despite low payroll and a horrible stadium, got to the World Series a couple times. I mean, we've had winning sports teams, and Indianapolis had the same thing. They had the Pacers go deep in the playoffs. They had the Pacers close to having a shot at a championship. You have Caitlin Clark, who's the WNBA's kind of poster child for great playing, that plays for the Fever. You just always had a tradition of sports, and even the Colts started out the year 3-1. So winning sports teams definitely helped propel that. I think it helped put Tampa on the map in kind of pre-COVID and post-COVID. That whole time frame is when Tampa really kind of blew up on the national scene and became more of a hot spot, and winning sports teams does it, because what happens is the whole country is watching a sporting event, and then they're doing the pregame show out in, it's November,
you feel proud,
and it's 80.
And it's exciting, and you have the beaches here.
And people that are sports fans want to go where there's a thriving sports scene. And so I think that's probably one of the reasons those small towns are performing well in Indiana. I grew up there, and look, no shade on Indiana. Like, I have a lot of family there. I grew up there. I'm grateful for growing up there. I would never live there again, though. So, it's the winter for me. Like, I don't have any. I'm at the age now where I don't want nothing to do with it.
Bones hurt.
Yeah, like, I'm not scraping ice or dealing with icy roads or salt on the road or, we can't drive for a couple days until they get the salt truck out here. No, miss me on that.
Yeah.
Like, I'll take the hurricanes.
Yeah.
Like I'll take the hurricane risk for not having to do that. Like, somebody actually asked me, they're like, Andrew, you spend all that time, energy, effort cleaning up your property. It's like, yeah, I did. You're right. I spent a week or two, doing some cleanup around my house, and there was some obstacles. But that was like a 1 month period over 20 something years. Like, if I factor the time that I'd have been scraping ice off of windshields in Indiana, it's a much bigger time commitment. I'll pass on that. So, but nonetheless, winning sports teams. We're excited about the Lightning. Hope to see you guys at some games. Again, follow us on social media if you don't, at the Duncan Duo. And if you're thinking about doing the streamline refinance that we talked about earlier, or you're about ready to put your home on the market, you're thinking about qualifying like we talked about and advised today, just go to citywidetampa.com. You can actually contact Melissa directly from there, or you can go directly to her loan application at citywidetampa.com. And thanks for tuning in, and have an awesome rest of your weekend, Tampa Bay.
Thank you.